better?
Yes.
Okay, there we go. One hurdle down, right? So I'm from Tandia Financial Credit Union. It's nice to virtually see everybody. Some of your faces it's nice to see. If not, I totally respect that. So we're a credit union, and our workshop today is going to be about making money relatable. So what that means is we're going to go through a bunch of different topics. I'd like to get this as interactive as possible, but our technical issues may prevent that. So I'm just going to give you kind of a brief synopsis of what a credit union is, what the concept is, and why we do presentations like this within our community. Everyone can still see? You can raise your hand, some of you? Yes?
Yeah, we can see it.
Okay, good. So what a credit union is we are essentially a cooperative. So what that means is we work within our communities in which we live in. So if you were to come bank with Tandia, we operate as just a regular financial institution, but you are an owner. So you pay a $25 member share. All it does, it gets deposited to your account. It goes absolutely nowhere, but it gives you the right to be an active member. So what that means is we pay back our profits to our members. So instead of us being a big financial institution, we earn our profits each year and we pay them to shareholders that nobody ever sees. We pay them back to our community and our members that bank with us. So I'll give you an example of what else a member share kind of allows you to do is about 6 years ago now, we were two separate credit unions before we formed Tandia. We were the Teachers Credit Union, and we were another credit union called Prosperity One. So we decided to merge. And in order for us to merge and amalgamate our two credit unions, our membership had to vote in favor of that. So you as a member would have the right and opportunity to voice your opinion and say, yes, this is a great move, or no, we don't think it is. So if our membership said no, we wouldn't have been able to move forward with our amalgamation. So obviously they did, because here we are today, which has allowed us to be a little bit more prevalent in more communities and have more capability to do different things. So why we do financial wellness workshops and different types of workshops is this is our way of giving back to our community. So we like to give back with knowledge, we like to give back with community support, and we like to give back obviously in monetary ways as well. So this is a channel of our financial literacy program. So this is for us to give back to a greater community without you guys having to come in and seek this information yourself. So if you choose to come in after, I would like to preface, this is not going to be a Tandia commercial. This is really just us providing you with some basic kind of financial tips, tricks, things that you can do to make your life a little bit easier. So, okay, so our solutions are unique as you. So as you see, and you'll see further, our branding is a fingerprint. So the fingerprint is meant to represent that everybody is unique. Everybody has a different fingerprint. No fingerprint is the same. So we understand that everybody's banking needs are unique, you know. Something that your best friend might have, or your parents, or a family member is something completely different, maybe what you're looking for out of your financial journey. And it is a journey, let me say. It starts very young and you don't even realize it, but the concepts that you bring forward with you into your adult life as a child, it's all the same kind of concept. So you want to make sure that you have a good foundation when you're set yourself up for success. So hopefully we're here to answer tonight all those burning questions you may have about money. And ultimately, my goal is to make it more relatable, to give you kind of some basic concepts that can help you in your everyday life and make it not such a daunting task. Because, well, I mean, I don't know if you pay attention to the news, but it is being implemented in high schools as of this year, coming year, financial literacy. But before, you know, we never learned how to do our taxes. We never learned what a mortgage is and what it entails. So hopefully this will bring some points to the forefront, and you'll be able to go from there. Okay, I can't see the chat, so I'm just making sure we're still good. Everybody can hear me. Am I breaking up?
Slight breakups, but it's pretty much going well.
Okay. So here's just some kind of graphic slides for you. So would you agree that wealthy individuals are more financially well than those who work paycheck to paycheck? But many wealthy individuals, just because you have lots of money coming in, often do find there are some financial wellness gaps. So 42% of Canadians agree that money worries make them lose sleep at night. And 32% of financially unprepared said they worry about supporting loved ones if something were to happen. I'm sure everybody can think of somebody in their life who maybe has been a little bit stressed about money or worries about the next phase. I'm just going to use myself as an example. Well, one, I'm a mom of 3 kids under 5. So, it's always a stress with children and money. But different things kind of pop up. So, a parent could be ill and a parent maybe was working and then now they're not working. Or you may think you kind of have it all under control and then a big life catastrophe kind of happens. So obviously we can't be prepared for all of these things, and there are going to be some setbacks and some things that will cause stress. But my goal and our hope out of these sessions is that we can prepare you as best as possible. So, I have twin 5-year-olds and I have a baby. So he just turned 14 months. So when I was on maternity leave with my twins, my sub pump in my basement completely overflowed. So I was not prepared financially for that. It was a stressor. It was one of those things that you're not really thinking that you need to kind of do and renovate or prepare to do. Oh, I will mention too, we had just finished our basement like 3 days prior to this situation that happened. So that was super fun. And I think maybe the gods are against me, but on my maternity leave this time, which is in March, my sub pump exploded again. So we had to rent out my basement twice in the last 5 years. So, I mean, that's not exactly something we were prepared to do or thought we were going to do. We were hoping to do a little more landscaping this year, but the world had different plans for us this past year. So how can you possibly prepare for a basement reno twice in 5 years? You can't, but how do we have the tactics and the kind of different accounts and different things that we can lean on to help support us through that? Okay, so hopefully you don't know where to start, and if you do know where to start, then this is just a little refresher for you. But here are some concepts that will help you move forward in your journey. So there's different benefits to understanding your finance. Yes, so we should understand the financial part of it, but there are a lot of emotional sides to it that we also need to recognize when you're going through your financial plan.
Sorry for interrupting, Carla, but is there any chance you could turn off the video?
Yeah, am I going really pixelated?
Yeah, I guess so.
Yeah, okay. Okay, is that better?
Much better.
Can you still hear me okay?
Perfectly.
Okay, perfect. So here are some money lessons that we'll go through today. So we're going to talk about kind of basic money fundamentals. What are some financial behaviors and stressors? We'll hopefully provide some sort of actionable strategy for yourselves and some take action tips that we can go through. So building a good foundation of good financial habits. So normally I would love to poll the room, and maybe I can just figure out how I can see the chat. I had it on 2 screens, but when I restarted, it disappeared now. So maybe could somebody give me some points that are being said when I ask some questions?
Sure, yeah. At the moment, there hasn't been any chat for the last 10 minutes, but
Yes.
I'll let you know.
Yes. Okay, so I'm just preparing because I want to ask some questions. So what do we think are some good financial habits? Throw them in the chat.
Budgeting? Oh, sorry, you said chat.
Yeah. Anybody saying any good financial habits?
Yes. The majority saying budgeting, investing,
Yeah.
saving, and being mindful of money in and out.
Okay, all good. What about when the topic of money comes up, how does it make everyone feel? So ideally, I wanted everyone to use kind of a GIF to use this. I don't think that's going to work right now. So I'm just going to go forward and show you my kinds of feelings about money. And I will honestly say I kind of fall into all these categories sometimes. So, I mean, can anybody relate to this one? Because I can. No? Does anybody miss Target? Does anybody remember Target here? No? I feel old with you guys, but it's okay.
Oh no, I think we all do know what Target is.
You do? Okay, okay. But it was in Canada at some point, and it was great. So, you know, the excessive shopper. We like to shop, we like to spend money, you know, just throw everything in the bucket. Then there's maybe this one, like maybe you're really kind of frustrated and you're thinking like, this is the end of things and I'm never going to be able to climb myself out of a hole. I sometimes feel like this too. I mean, it's normal to fall in all of these categories. And lastly, you know, you just feel like a boss. You're here, you know what you're doing, everything is under control, there's no issues. So this is meant to just, one, make you guys laugh a little bit and make you feel and understand that at one point or another, you're falling into one of these categories, right? So there's times where, you know, you just want to binge shop. There's times where you maybe come home and you feel like, oh my God, what did I just do? How much did I actually spend? Or, you know, you go out for a night and you spend a little bit more on some alcohol versus thinking that, oh, I'm just going to have one drink and, you know, $200 later, it's like, oh my God, how much did I actually spend? And then there's sometimes that you feel like a total boss and you know exactly what you're doing and you feel like you have everything under control. And that's totally normal to feel like this. It's what happens in life. We go up and down through the different kind of cycles of your financial picture, just like you do within your personal relationships and such. So what's the main thing when you talk about your financial picture is maybe just understanding what it encompasses. So ultimately, you are the one that is in control and you need to tell your money where to go and what to do. So one, all of that, by you being in control and you deciding what's happening with it, will help reduce your stress about money. Developing positive financial habits. So I know we made some comments about budgeting, we made some comments about good financial savings plans and things like that. But sometimes a positive financial habit is simply just checking your statements, making sure that you're not being overcharged for things. I don't know about you guys, but again, this could be because I'm a mom of 3 under 5. We don't really go anywhere, and I don't think anybody's really gone anywhere through COVID. But I took it upon myself to stop and just go through all the subscriptions to things that I'm paying for, and I was a little bit astonished. I'm paying for Apple Music, Amazon Music, Disney Plus, Amazon Prime, Crave, Netflix, and I think, Apple TV, Apple Plus. So, I mean, there's probably not a need to have all of these TV subscriptions, but it wasn't until I actually sat down and saw the cost. And we're not the smart people that like use other people's Netflix. Like I'm the sucker that my brothers use my Netflix, so I'm paying for everybody. But a positive financial habit is just stopping and like realizing, what are you actually paying for? Is there stuff that you can cut out? Is there things that you're not using but maybe falls by the wayside because you're not paying attention to it because it's, you know, $10 here, 10, $20 there. But when I added it all up, I was paying like $80 in just subscription fees. I mean, is it worth it in my life right now? Absolutely. Because, you know, somebody can watch Netflix, somebody can watch Disney Plus. Before our workshop here, I had to just shut off like 45 iPads, what it felt like, because it was interfering with my internet. Not actually 45, but enough devices that it was too much. But yeah, so positive financial habits don't always have to revolve around budgeting and savings and all those things. It's simple things, checking your statements, making sure, you know, you're only spending X amount when you want to go out. You're only bringing that amount of cash with you and you leave your cards at home. Simple things really do go a long way. Knowing and keeping your finances organized is huge. To know where everything is and have an understanding where everything is really helps manage what's going in and out. Setting and prioritize your financial goals. So what do we think are some financial goals? Anybody want to throw some in the chat? If somebody could say it out loud again. No one's got some goals?
They're coming in fast. not spending
Okay.
over amount of money, not saving enough for down payment on
Yeah.
a car, buying properties, budgeting.
Oh, awesome. Awesome goals. I'm glad to hear it's the realistic goals, because sometimes when I ask about this point, people are kind of like, oh, I want to buy a house in 2 years. And sometimes it can be a little bit unrealistic. So when I talk about prioritizing your financial goals and setting your goals, it should be, you should have kind of a small goal, a medium goal, and a large goal. So maybe that large goal is buying a house. I mean, I don't know who's buying a house anytime soon, because I can't rebuy what I have right now. I think I would be in a shack at this point, because it does seem a little bit unrealistic right now. But what could you do to get yourself there? So maybe a medium goal is putting a time on that. And then your smaller goal is just, setting up that savings account for that down payment on a house. So taking your big goals and breaking them down into smaller goals. And lastly, plan and project income and expenses in advance. So as much as you can, plan and understand where exactly you're spending your money and know what you want to spend on it. So when I say that, I don't mean like you can't spend, you can't go to Target and buy the whole aisle of stuff, because if that's a priority to you, then just plan for it. I'm a Virgo, and I actually read a weird horoscope the other day saying, Virgos are, don't tell me not to do it because I'm going to do it. And that's exactly me. So the minute somebody tells me you can't spend on that, or you can't eat cookies, like I'm going to go on a shopping spree and I'm going to eat a box of Oreos probably. So it's knowing and understanding that you can do the things that you want to do. You just need to prioritize them and make sure that you have the income to support that. So I hate when we go and people are like, you need to cut this out of your budget and this out of your budget. I mean, ultimately, we can't take our money with us when we die. So we want to be able to enjoy it and spend it appropriately within and still doing everything that we want to do. Okay, now my screen is frozen. Great. Okay, here we go. Okay, I can see my chat now. I figured that out. So who has had avocado toast? Am I dating myself? Is this a millennial thing? I don't know, but who has had avocado toast? Yeah, you can put it in the chat. You can put it in the chat or raise your hand. Me, amazing. Okay, who agrees that it's like the best thing ever, right? Overrated? Come on. Love it. Okay, great. Awesome. I agree. I think avocado toast is unreal. So there is an actual, or I put this in here as like a talking point and a joke. So there is an actual article. I mean, I hope it's still up on the internet, but I feel like everything stays on the internet forever. But it's a whole article that millennials cannot buy a house because they spend too much money on avocado toast. So, I mean, I don't think that's a literal thing that they spend too much money on avocado toast, but the whole concept is that, we're spending too much on the luxuries and we're not putting enough into the savings plan. So how is there a way to enjoy the avocado toast? Because we all know that avocado toast is like 14, 15 bucks when you go to a restaurant. It's not your like basic eggs. It's expensive. And if you add an egg on that, it's even more expensive. But I put this in here as a concept that there's a way we can enjoy the wants while still ensuring that our needs are met. So we're going to play a little game of this and that. Again, we're just going to throw stuff in the chat if we can. So $20,000 was just deposited into your bank account. What is your first impulse? Put it in the bank? Who says that? Maybe we raise our hands for this. Nobody wants to put it in the bank? Yes, okay. We have some people raising our hands. Some, I like that idea, yeah. Okay. Who is like, YOLO, drinks are on you today? Do we have anybody raising their hands? Be honest, because I'm probably going to be the YOLO person, so it's okay if you are. Nobody, geez? No wonder where it came from. That's a good. Drinks are expensive, maybe one round. Awesome. Boost time, I'm with you. Put it in the bank. What do you mean? We just came out of a lockdown. Nobody wants to YOLO, drinks are on them. Put it in the bank. Okay, you guys are very responsible. Drinks are $10 each. It's true. I know, it's crazy, especially in Toronto. Come to Hamilton, they're not as expensive. Okay, next, tuck it away in an account that you can't touch, or immediately check out of all your online shopping carts. What do we think? Pre, tuck it away. Very, very responsible group here. Tuck it away, very responsible. No online shoppers here. Want to hear a funny story? So, you know, I like to online shop, but I just fill up my carts and I don't actually check out, because sometimes when I actually see the number, I get a little afraid that I actually put that much merchandise in my account, in my cart. But all my like cards are saved on these sites, and my daughter was playing on my phone and checked out of an Aritzia cart that was like $500 that I really wasn't planning on spending. So maybe clear your carts in case you have kids or anybody that plays with your phone. But next point, what about figuring out ways you can invest it? Oh, I like that. Put the money in a TFSA. We have some smarty pants here today. Or you're going to just figure it out later. Save it in a wish list. Oh, I'm going to definitely do that. I've learned my lesson. I don't keep things in my cart anymore. Lastly, are you going to strategize on how you can make more? I think some are, if they're investing in some stocks. Or are you going to keep spending it till it runs out? A little bit of both. Okay, this is good. So again, this is just a fun little way to test and see, you know, where are you guys at? What are you thinking? There is a way, again, to do a little bit of both. Maybe I like some of the responses, you know, put some in the bank, use them as a YOLO nights out, buy some stuff, but also strategize on ways that you can make it grow for you. Okay, so needs and wants. So there's a lot of things that fall into both categories, right? Like, am I the only one that thinks that? I don't think so. But a need is clothes, right? Everybody needs to wear clothes. But I mean, we don't need to wear the high-end clothes. Maybe there's something cheaper that we can buy, or we buy the knockoff of it. Everybody needs to eat. Do we need to eat out at a restaurant or Uber Eats all the time? Probably not. Is there a way that we can reduce the spending on that? So, but still making sure that you are satisfying those wants that you still want to do, because the more you restrict yourself, the more you feel the need that you need to spend it and splurge and go on these vendors. So I am going to give you this scenario because I'm an avid coffee drinker, and maybe not so much in the last year, but before COVID and before we were stuck at home, I would buy my coffee every day because it was important to me. It was easy for me. I didn't have time to get kids out the door. Plus, I love that. Can your mom come brew my coffee at my house? That would be really great. I really miss that at my house. But morning takeout coffee. So if you saved that takeout coffee, and we're just talking like regular coffee, no Starbucks here, 5 times a week, how much do we think we could save? Anybody want to throw some? Approximately 15, 20. Okay, so $2,243. If you, this is over a 3-year period, yes. But that, what, $2, $3, if we took that every day and we put that into a savings account, you could go on a little trip. You could go on a spending spree. You could go do whatever you want. And that is one little thing that is so small that you probably wouldn't even notice. So for me, takeout coffee was a priority. So I always work that into my budget. But what I did is I also put little bits aside. So I, again, am a mom, but you know, I need to prepare for things like Christmas, because Christmas gets very expensive when you have 3 kids and they're all looking for Santa gifts and they're all looking for the newest, coolest thing, and their little friend has this toy and that toy, and you got to keep up with them, but also not. I'm just kidding. But these little things that I put into a little savings account, something as small as $2, $5, $10, I use it for these little goals that I have. So, you know, when it's time for Christmas, I don't even have to think about it. When it's time for Halloween and there's costumes, I don't have to think about it. So, and this is not saying you have to cut out coffee or anything like that. This is just showing you an example of small little changes in your habits can make a huge difference in the long term. And when you make it automatic, you don't even see it. Would anybody actually miss the $5 or $10 that comes out of your account? And would you pay attention to that? Probably not, right? When you are thinking such small amounts. So there's a small little goal or tip when it comes to buying your books, or if there's a trip that you want to go on. Everybody has different goals and everybody has different priorities. So these are small little ways to help you get there. So influencers, what do you think I'm talking about here? You think I'm talking about Instagram influencers, or am I talking about other things? No, nobody? Family, friends, yeah. Different stressors and things that will influence your life, right? I like that. People who influence your financial decisions, right? It could also be your personal characteristics, right? It could be where you are in your age bracket. Are you married? Are you not married? Does your spouse influence your spending? Are you trying to keep up with the Joneses? Your personality, fact, patio nights. Yeah, I mean, and I feel like I'm so there right now because we've been cooped up. So anytime somebody is saying anything, I'm like, yeah, I'm out. Like, let's go do it. Let's do these things, because if we get locked down again, I might cry. But different things and different characteristics about yourself and your people around you definitely influence your financial picture. I will openly say, so I don't know, you guys have probably, you know, there's binge eaters, right? So if somebody feels stressed out or annoyed or anything, they maybe run to food. I am a binge shopper. Legit. Like it makes me feel better when I go shopping, when I fill up my online cart, all of those things. But what I have learned to do, because, you know, I'll go spend all this money and then I come home and there's instant regret, is I buy things at places I can return it at. So I may go on that binge shopping spree. It makes me feel a little bit better. But then I come home and I realize, okay, maybe I didn't need like 4 shirts of the same color. I'm going to go return them. So then I go return it and it doesn't make me feel as bad. So I learned that lesson like a long, long time ago of, you know, buying strictly at stores that can have a refund policy, a good refund policy, because I know that's a trigger for me. So whenever I'm stressed out or I'm annoyed and I just feel like getting away, I hit up the mall. So really COVID has been the best thing for me. Because when I see the total in my cart, it's made me rethink things, but still, it's something that I do, and that's my trigger. So knowing that about myself, I made a little adjustment and a plan. So I still go do those things because it does help me. But again, I make sure I can return it so I don't feel that bad. Your financial literacy, that's a huge component. So your knowledge of financial tools and concepts. Do you have the right bank accounts that are working the best for you? Are you paying too much in bank account fees? Do you have the right savings accounts? Like just knowing and understanding all the different types of accounts and avenues and things that you can kind of partake in your financial journey really helps with the financial literacy part of it and helps you earn a little bit more or make sure that you're not being dinged in too many fees. Your financial behavior, so your financial actions. Have you created a plan? Do you have a savings plan, and have you taken a step towards this? So again, I'm going to go back to the food. You know, you can say, or like weight loss or things like that. You know, you can say, I want to work out. I want to lose weight. I want to get fit. But if you're not putting the plan into place to help you get there, you're not going to see the results. So it's the same with your financial behavior, right? If you don't put a financial plan in place, and nobody said it has to be like this strict plan and this is what you have to do and you can't have any fun, but have an idea and a plan and a concept and work with somebody so that you have a plan for the future. So you can work on that and you can reach those goals versus saying, you know, I want to lose weight, but I'm never going to work out or eat healthier. So it's the same concept. Your financial situation definitely has a lot to do with it as well. I mean, if you're in school, do you own a home? Is your salary low? Is your salary high? To me personally, it doesn't matter whether your salary is low or high, there should always be some sort of savings plan in place. A really good book, it's really old now, but it's called The Secrets to the Millionaire's Mind. And it talks about having that financial situation. So people kind of think, oh, when I have more money, I'll put together a savings plan. When I have this, I'll put together a savings plan. So it uses an example of a dad and a little girl at an ice cream shop. And the little girl sees a sign for 3 scoops of ice cream. The dad gets it. She immediately drops it on the floor. So next, daughter wants it again. Dad, I want another 3 scoops of ice cream. So he says no and starts her off with 1. So if you can't manage that 1 little scoop of ice cream, how could you possibly manage the 3 scoops of ice cream? So even if you're at a base salary or you're at a part-time job or whatever it may be right now, if you can't manage the little bits of money, it's not going to get better when you get more money, because it's still going to be the managing part that you need to work on. So simple things, again, do go a long way, and it's important to understand these things about yourself. So when you start to reflect back and understand these situations or your behaviors or triggers, it does help with long-term gain in your financial picture. And lastly, obviously, there are stressors, right? Job loss, it could be a bankruptcy, it could be your sub pump exploding twice. All these things cause financial stress. But it's important to understand and know how to deal with these stressors. Okay, so I'm going to do a little put your hand up. So put your hand up if you have one banking account where all your bills come out of and it's also linked to your debit card. Yeah, majority of people, right? So have we ever thought about moving some spending out of your bank account and moving it into different types of accounts? Yes? No? You can write some stuff in the chat. Yeah. Okay, so what I mean by this is a tactic that some people use to help budget is, instead of having one bank account where everything comes out of and it all links to your debit card, you separate and have multiple accounts. So obviously you want long-term multiple accounts with no fees. So you can open a savings account. So I'll give you an example again of myself. So we have multiple accounts. So every time I get paid or my husband gets paid, it goes out of our main checking account and it goes into separate accounts. We have like a gas and groceries account. We have a mortgage account. We have a property tax account. We have an emergency savings account, all different types of accounts. So it automatically comes out of our bank account. And then whatever's left in the bank account is what we use to spend. So it's a little bit easier to manage. And then on the dates, so this is all like automatic. I've set it up so that it goes back and forth. And people maybe that do our coding, or I don't even know, may hate me, but it makes my life easier. I don't care. So let's say my mortgage comes out on the 15th. I set up an automatic transfer to come from my mortgage and bills account and move it into my daily checking account. So it comes out of my checking account, but it's not sitting there. I see somebody that's asking, how can you set that up? So that's probably just on your online banking. There's a way to do automatic transfers between accounts. So you can probably set up, and don't quote me because I don't know your financial institution, but you can probably set up a automatic account, like a savings account, and do the automatic transfer. So your pay comes in, you take that $1,000, whatever it might be, move it into your mortgage savings account, and then you set up another automatic transfer to move it back on the day that it's supposed to come out of your account. Make sense? Okay, next one. Put your hand up if you are left having to do mental math every month trying to figure out if you have enough money to pay that bill. They're like, oh my God, I think a bill comes out tomorrow, and do I have like $150 or do I have $146, right? So this goes back to the same concept. So what your predetermined bills are. So if you know that you're going to have a bill of $200 that month, but maybe you can't afford to take $200 off of your paycheck. And again, I'm just using random numbers here, okay? What you can do is set up smaller amounts. So let's say you get paid biweekly. So maybe every paycheck, you put a little bit into that account. So you know that at the end of the month, you can just retransfer that back in and not have to worry that, oh my God, do I have enough money for that bill that's coming out this month? Little tactics. I know it seems so basic and you probably are like, oh my God, this is so like easy, but sometimes we take for granted the little things that we can set up and make our life easier and have our financial picture a little bit more fluid. Okay, lastly, put your hand up if you end up overspending or putting things on your credit cards each month. Yeah, right? It's inevitable, especially when you're in a position where maybe you're working and you're not getting as much income or consistent income. But these are things that, again, are financial behaviors that we need to pay attention to and make sure that we try to avoid. So my husband and I mean, my friend told me the other day that she thinks I'm crazy, but we have probably two credit cards in total, and they probably only total like 3,000 together. Because for us, it's important, like if we don't have it, we don't spend it. So if there is something that we want to do or we want to buy or we want to spend money on and we don't have the actual cash each month, we don't buy it. I mean, there are things that we need a credit card for, right? So there's like subscriptions and things like that have to come off your credit card, which is different. But if we want to go on a day trip or a whatever it might be, or a trip, or last year I bought a Peloton bike. I really wanted a Peloton bike, but we don't buy things unless we have the cash to pay for it. So we may put it on the credit card, but then we have the cash to immediately transfer to it. So that doesn't always work. I mean, it's worked for us because it's helped limit our spending and it makes us think twice a little bit on things. But there are situations where you can't avoid it. And it doesn't mean that there's no help. There is help, but it's things that make little differences that maybe work within your family unit or your personal unit, whatever it might be. But things that'll work and make sure that you don't go overspending each month. Okay, so I think we're getting close on time here. Oh my goodness, I talked too much, sorry. So there's different financial tactics that we use. So there's budgeting and then there's cash flow. So budgeting is essentially your cash flow. So you want to add up all income sources that you have and all expenses that you have in your month. So this is expenses like gas, if you're going to go to the grocery store, if you're paying for a bell bill, if you are paying for going out for somebody's birthday that month. All of these things should be factored into your expenses. Then you minus the two and you should be left hopefully with a positive number. But if you're left with a negative number, then that is a reflection for you to go back and review your expenses. That means that you're overspending in that month and there could be somewhere where you could reduce that spending. So, you know, maybe you don't Uber Eats every week, maybe you just do it once that month, right? So different things that you can do, but when you put it on paper or you put it in an app and you see the numbers, it becomes a little bit more evident to you versus trying to do the mental math and thinking like, oh yeah, I got enough like income coming in, money going out. So putting it down and writing your cash flow statement does help open your eyes to what your actual situation is. Like I said, my cash flow statement was me realizing I'm spending $80 in subscriptions a month. Then we have your net worth statement, which is a little bit different than your cash flow. So this is a total value of all your assets. So if you own a home, a boat, a car, a cottage, whatever it may be, any savings accounts versus any liabilities you have. And the liability would be, you know, you own a home and you have a mortgage that's attached. You have a boat, you have a boat loan that's attached. Anything that is a liability, a credit card, a loan, a line of credit, a student loan, all of that counts as a liability. And then you minus the two. At this stage in your life, and even in my stage in my life, it is normal to have a negative net worth. Well, actually, maybe not in 2020 at this stage in my life because the house values are ridiculous right now. But typically, your liabilities are going to outweigh your assets, right? So you may not have a home yet, which would boost your net worth. Your car values usually depreciate. I am not a boater. I always use boat in this example, but maybe your boat value depreciates versus your loan, right? So if you have a negative number here, don't stress out. It is somewhat normal. Okay, so hopefully these little simple steps, figuring out your monthly income, understanding your triggers, setting yourself some goals, and then ultimately keeping track of your income and your spending will help to reduce your stresses about money. Okay, so setting and prioritizing your financial goals. What financial goals are you working towards? Maybe there's a debt reduction plan. I see some people have pay off their balances every month. Maybe there's a student loan plan you want to reduce. Emergency savings fund, that would be, if your sub pump explodes and you need to redo your whole floor and basement. I mean, insurance covers some stuff, thank God this time, but things that you aren't expecting. You want to purchase a home. I know it may seem like a long time away, but you should always be thinking of your retirement plan. I think gone are the days where we have, the company or government pensions that our parents or grandparents may have had, the teacher pensions, things like that. Yes, some people really rely on them, but it is important to have your financial plan and your retirement plan so that you have great income when you're able to go and do all these fun things. Improving your cash flow, major purchases that you want to do, and traveling. Everybody should have a travel budget. I had a member a long time ago when I was working in a branch, and every time she would come in, she would talk about how she can't afford to go back and visit her family in El Salvador. And every time she broke my heart, and I stopped her one day and I said, no, this is not happening. Next summer, you're going to El Salvador. So we put together a small little savings plan on a payday savings term, which every time she got paid, we took a little bit of money out. And by the next summer, she went, and she was so happy. And it was something so small that we did over a longer period of time. But it is important to make time to do those things. Like I said, we can't take our money with us, so we might as well enjoy it and find ways to enjoy it while we can. Okay, so assessing where you are today, I think we've kind of covered this to no end, making sure you started a plan and understanding what your biggest challenges might be. And here are some tools. So I think we have some pretty proficient people here. So does everyone know and understand what a tax-free savings account is, how to utilize it, what the requirements are on it? Just maybe you guys want to throw that in the chat. Yes, yes. I have one. This is amazing. I will, absolutely. Okay, so I will still go through it just to give you another understanding about it. So this isn't relatively new. I mean, you guys were probably like 8 when this came out, but it is new to us, as opposed to the longer term RRSPs and stuff that have been a little bit more tenured with the government. But this is a government initiated plan. So TFSA is short, and it's tax-free savings account. So what it does is it's a registered tax-free savings vehicle. So I'm going to give you the Coles Notes version of this. So it means that any money that you have in this plan is not, the interest that you earn is not taxed. So if you have money in a basic GIC or guaranteed income or any sort of investment, and you are earning interest on it, you are issued a tax receipt from the government because you now have to pay taxes on the interest that you've earned. If it is under the tax-free savings account umbrella, you are not responsible to pay the taxes on that money. So it's a government initiative that was aimed to encourage savings with the Canadian population. There is no minimum withdrawal requirements, and it complements any other savings plans that you have. The only thing that in stipulation to know and understand about a tax-free savings account is the lifetime limit and the contribution room. So this plan was initiated in 2009. And the government said, you can put $5,000 into this plan every year. You cannot put more than that, but you can put less. So you just can't go over your lifetime limit. So every year in January, you accrue new room. So I have a little chart here. So it shows you it was 5,000, 5,000, 5,000, 5,000. It went up to 5,500. You see a spike in 2015. They upped the limit to 10,000. Then they brought it back down to 5,500, and it's been at 6,000 the last couple of years. If you have absolutely never put into a tax-free savings account, you can put $1,000 into that tax-free savings account. You cannot put more than that. None of the interest that you earn and kind of stays in that account counts towards the cumulative total. It is only your contribution. So if you've never put in, you're good to go. If you can put in and take out and put in and take out. If you won the lottery today and you wanted to top up your tax-free savings account, you cannot put more than 76,000. Yes. Oh, good point. I forget you guys are so young. Assuming that you were 18 in 2009. So you have to start based on when you were 18. I keep forgetting you guys are a lot younger than me. But let's say whatever your cumulative total is based on when you turned 18, but let's say I'm going to use myself as an example because I was definitely over 18 in 2009. But so if I've never put in before, I won the lottery, I'm going to go put $76,000 in today. Great. My tax-free is taxed. Let's decide I want to take out the money tomorrow to go to Italy. I'm going to take out $5,000. I can't recontribute that $5,000 until 2022. I almost forgot what year we're in. Because I will have, if I recontribute it within 2021, I will have considered to have over contribute to my tax-free savings account. So you can take money within and out, but if you are at your lifetime limit, you cannot go over that contribution in the same calendar year. You can put back any amount that you took out in the next calendar year plus the new calendar year's contribution. Did I lose everybody? Did that make sense? You're not fined if you're over contributed, you're taxed. So I guess yeah, kind of is it like being fined because you have to pay the taxes on any money you over contribute. Okay, so again, depending on the type of investment, so think of the TFSA as an umbrella. So you can have a savings account, you can have an investment account, you can have a term account, a GIC. It doesn't have to be just a strict savings account. It is flexible under different types of investment opportunities. Am I good to move on? Did I lose anybody? If it is kind of it seems so easy to understand, but it is a little bit tricky. So if anybody does want to discuss this further and has more questions, please feel free to reach out to me. I will provide my email at the end. It is very easy. All you have to think is, you know, I can't go over my lifetime limit. So as long as you know what you're at and where you're at, it's easy to track how much you have going in and out. I also recommend to everybody, you know, keep your TFSAs at one place because then it makes it easier to know what you've contributed each year. It is on your notice of assessment too, and we'll show you how much you have contributed and what your available limit is. Okay, so registered retirement savings plan. So what these are is this is another government initiated plan that is, I don't even know how old, but has been around for however I've been around. And this is a plan that helps you save for your retirement. So the easiest way for me to explain is an RRSP is what they're referred to as, is it's one big giant tax deferral. So when you contribute to an RSP in your higher earning income years, it reduces your taxes paid. So it reduces your tax bracket. So you pay a lower bracket if you contribute into your RSP. If you take your RSPs out during your higher income earning years, you're going to be taxed at that rate. The whole concept of the retirement savings plan is that you're taking it out in retirement when your income is lower. So you should not, a lot of people, and I think it's more so like my parents' generation, every time I do this workshop, they like hate on me and think, oh my God, these are terrible. They get you, you have to pay taxes. Yes, absolutely. You will have to pay taxes on this money eventually. But the concept is that you're only taking it out when your income is lower. So you're paying less taxes. So it helps to reduce your income in your higher income earning years, but then provides you a income stream in your retirement years. Does that make sense? And maybe some people want to raise their hand. Yes. Or else I feel like I'm talking to my own self on the screen. Yes. Okay. Perfect. Good. Yes. And this is also on your notice of assessment. You will see what your retirement, what your limit to put in your retirement savings is as well. Because again, it's 18% of your gross income less any pension contributions that you may incur. Okay, we're kind of pushing time. Okay, so I'm going to go through just some debt strategies with you. Okay, so I'm going to flip through. So again, we're going to go back to the first part, the emotional side, understanding your triggers, why you're overspending, what you can do to help reduce it. So obviously, we want to help you avoid additional money, borrowing more, understanding your triggers. So I want to show you this slide here. So create yourself a repayment plan that's realistic, okay? So sometimes it could be daunting to check and see, oh my God, I have so much in debt, right? So here is a simple solution that can go a long way, right? So you have two credit cards, a credit card, same balance, same interest, same, no, that's it, same balance, the same interest. You change the payment by $50 and it really helps reduce the time to repay. And sometimes people don't realize the total cost of borrowing when you factor in the interest cost into what you've already borrowed. So again, just by changing the payment by $50 a month significantly reduces the time to pay. So if you have 3 credit cards and you're looking to repay them down, pick your lowest credit card balance first, knock that away, add another $50 towards that, and then focus on the next one. You can also consolidate. So by taking all the different types of credit vehicles that you have, so you're paying different interest charges to each of them, right? So if you take all of them combined and you put them into one loan or line of credit and you work towards paying that, it also helps you reduce that principal a little bit faster and it reduces your interest costs on it. So that's always an option too. Okay, so we will go through this, but I want to leave more time for questions and stuff. So who knew that you could pull your credit bureau once a year? Did everyone know that? Did people know that? Did I just not know that? Anybody want to raise their hands or not? Did you know that you can get a credit report free each year and not be dinged? Yes, I encourage everybody to do this. Okay, so I'm going to tell you a quick little story. In, I don't know, 8 million years ago, the BlackBerry Pearl. Do you guys even know BlackBerry? I feel old. I don't know if I've mentioned that this time, but I had the BlackBerry Pearl. It was the coolest phone to have, but then the iPhone came out and that was the cooler phone. So I was with Fido again. Yeah, right? Oh gee, my mom used to play that. Oh my God, guys, I swear I'm younger. I couldn't be your mom, but anyways. So I was with Fido. I don't even know if you know Fido, but Fido and Rogers are now the same company. So Rogers bought Fido. So I was with Fido, had the BlackBerry Pearl. I wanted the iPhone. They said, yeah, no problem. You can move to Rogers, no issue. Great, moved, got the iPhone, happiest person of life. It was like the first generation iPhone too. Anyways, so I heard nothing about it. So flash forward like 2 years. I was in university at the time. Now I'm like 2 years out. I'm trying to apply for a job, ironically at Tandia, or what was formerly Teachers Credit Union. And our HR person called me and is like, oh, this is really great. We want to hire you, but we just have one question. There's a collection item on your credit bureau. I had no clue what they were talking about. I thought, a collection item, I don't know. What do you mean? So I researched it a lot more. It took me like 3 days. I thought it was like identity theft. Long story short, Fido charged me a cancellation fee by mistake because they weren't supposed to. They took it off my bill, but they didn't take it off of their system. So they were reporting it as a unpaid collection item to the credit bureau each month for 2 years. And I had no idea. It was not on my bills. It was not anywhere. I didn't owe this $500, but there was a paperwork error and it was reporting to the credit bureau. And the credit bureau doesn't call you, the creditor does. So if it was an actual credit item, Fido would be calling me every day. So if I didn't apply for this job and they didn't check and question it, I would have never known it was there because I never checked my bureau. So sometimes when you sign up for a credit card, for a free shirt or whatever it might be, like those things can stay on your bureau and you may not even know, or maybe you thought you paid a credit card out, but there's a balance of like 2 cents owing and it's still open on your bureau. Those are things you should check. So if you don't or haven't already, I highly suggest you check. So the 2 Canadian credit bureaus are Equifax and TransUnion. So you can go to either of these websites and pull your free report from there. So learn from my mistake, or not really my mistake, but my little blunder that happened, and check your bureau. So I'm going to go through this part. We'll save that for another time about your credit history. And we will just wrap up here and go through different things that you can do. These are things that are unique to Tandia or things that we offer. We have a feature, which actually most banks have. So this is a great little way to start little savings plans. I call this my piggy bank in my bank account. So it's called Round Up and Save. So every time I use my debit card, you can set it to $1, $2, the nearest dollar, $5, whatever you decide. It takes that out and it puts it into a savings account for me. So if I ever have to dip into a savings account, that is my first place I go, is my little piggy bank, because that to me is just my change from the day. Because you don't go home and it's like, I spent $26.48. No, you're either likely rounding up to 27 or 30, right? So that's a little feature. So if wherever you're doing your banking, if you should go check that. Our rates are generally better. Our fees are generally lower. We have all the same fun things that all the other institutions have. And we have what's called the ding-free ATM access network. So yes, there may not be a Tandia on every single corner, but if you see a credit union or a Manulife or a national bank, we are all on the same ATM network. So what that means is you can go use a Meridian ATM and not be charged. So you're a Tandia member, you're going to go use an ATM from Meridian and you're not charged that $3 or whatever that you're charged when you use a different bank machine. And this is the part I really wanted to get to. So we have lots of tools to help you. We are avid on social media. We have Instagram, Twitter, LinkedIn, Facebook, and we will be running a Instagram contest. So we do this every year and it is called Buy Your Books. So we've done it for the past 3 or 4 years now. So essentially is you could win $2,000 towards the purchase of your textbooks for this upcoming school year. So we run it at the end of August. It should be coming out very soon. And all you need to do is follow us, tag us, and share it with your friends. So the more times you do it, the more times you get entered into the draw. So I think you should be excited about this. It's a really cool, fun thing. But it is a great little contest, and then we present you with a check because we understand and know how much this causes a financial stress is purchasing your books. I mean, I don't even know, are the books online now? I don't know. I used to have to go and to the bookstore, and I was an English major, and I was crying by the time I left the bookstore when I saw how much all the books that I had to buy were. So this is a great this is a great little tool that could help you. I also want to talk about, we are launching a podcast, which will be coming out in hopefully September. We're aiming for late August, but that's just not going to happen and not realistic. So it should be coming out in September, and it is all kind of based on this. So workshops like this, it's just going to be me talking, making money relatable, different topics. We would love to have some guests on. So if anybody would like to be a guest on our podcast, and what that would pertain is, just talking to you guys, asking, what are your questions that you have, and hopefully being able to answer it, and so that we can help the wider community and help debunk some of these financial stressors and things that people think they need to have, but don't know how to get there. We want to make banking less boring and money more relatable, so that it feels like you can be in control and you're going to be that boss every time. And that's it. So we can have some questions. I know we went over time a bit. I've included my email here. So if you have anything that you want to discuss or talk personally about, or have more questions, or anybody I can direct you to, please reach out, and I'm more than happy to do that. And that's it on my end. Thank you.